So, all right, let's move on and get back to markets. As the finance minister puts final touches to the union budget, the street is preparing a wish list on what that budget should include. Joining us on this show today is Nirmal Jain, the chairman of IIFL, to outline his expectations from the budget 2015. Nirmal, good afternoon. Thank you very much for joining us.
Yeah.
First, a word on the markets that we've seen so far through the course of the year, especially in the last week or two.
Market has been consolidating. I think now till the run-up to the budget, there's uncertainty. There'll be one set of people, they're very optimistic. There are one set of people who will always say that a budget can't do any magic. I mean, finance minister doesn't have any magical wand to make things overnight, smoother or better. And also at ground level, things will take time to show results. So I think market will remain, will keep consolidating. I don't see market having a big rally or a big crash from here till budget. But and post-budget, I think whatever cues they get from budget will decide the trend for the market.
But Nirmal, just
as of now, we are seeing today there's some corrective phase in the stock that are run up a lot, and very select stock that have got the coal allocation in the power sector, which is now coming into limelight because some of the coal auctions have now gone through. But other than that, I think market is lackluster and just waiting for the budget.
Nirmal, how disappointed are you with the earnings season that's just gone by, and how long can the market just run up on expectations of reform?
I see the earnings have been disappointing in the last quarter, and I don't think they will improve in a very significant way in next 1 or 2 quarters. So all the long-term investors, in fact, most of the FIs and mutual funds, they have their own analysts, and they can understand things just the way you and I can also do. That in most of the sectors, you can't do anything in 1 or 2 quarters. They will take some time for the sentiment improves, the investment will improve, the demand will improve, and then the margins will improve. So obviously, it will take a while. But things are moving in right direction. People are betting on little medium to long term, which is they are looking at earnings revival, maybe 2-3 quarters, in some sectors 4-5 quarters, and depending on the kind of sector that you're talking about. But I think most people are still optimistic. They are looking at market will never look at the rear view mirror and say that okay, this last quarter's earnings, so let me give this multiple because that is historical, that has lost all its relevance after. But what will market say that can these earnings? What is the outlook for next few quarters? And last quarter or historical earnings are relevant only to the extent that they can give you some peek into future that okay, will this trend be maintained, will be improved, or will worsen. So I think market always looks ahead, market looks at future, and that is what market is doing. Having said this, of course, the earnings for this quarter were disappointing. In fact, in some cases, they were worse than what analysts had expected. I would say that analysts downgrade, from what they forecast to what reality is, or how they look at, the immediate quarter after, might continue for a quarter or more, and then we'll see things turning around. Just as you see credit rating, I mean, they already started, now there are more upgrades and downgrades. That's happening on the debt rating. I think equity will take a quarter or two more.
Okay, we've just had Deepak Parekh in all the media this morning, Nirmal, last evening and this morning, saying India Inc. seems to be running out of patience, hoping that this government will move faster on several small and big reforms, and hoping that the budget will be a manifestation of that in some ways. Are your expectations high from this budget? People have spoken of a big thrust on infrastructure, maybe even at the expense of fiscal responsibility. Others are talking about how to actualize the Make in India program. What are you expecting from this budget?
No, I also have been hearing that many people are echoing the sentiment that enough talk and now we need to see real action. And in fact, somebody jokingly put it very nicely, enough of man ki baat, now let's do some kaam ki baat. But I think budget is a key event that we all are looking forward to. But to be fair, if you look at coal auctions, if you look at certain other things, government has moved. And in a democratic setup, nobody has come up and said that, okay, this is the thing that you could have done faster or differently, and government has done it this way. Because more or less within the contours of law and democracy, I think they are trying to move as fast as possible. Let's not forget that they don't have majority in Rajya Sabha. And still they have gone and did so many major ordinances, despite President cautioning that ordinance is not the route in a parliamentary democracy. So I think government seems determined, and they are trying to move as resolute manner.
So what are you expecting from the budget this time then, Nirmal?
Yeah, budget now, there's a contradictory thing in the budget. One is that either you maintain fiscal deficit or you pump prime the economy and put growth agenda ahead and say that, okay, private sector investment is not coming forth. I mean, they haven't seen good times in the last 5-6 years. They burned their fingers, their margins are down. So the lead has to be taken by public sector investment. The capex, whether it's a road, port, power, has to come first from public sector. Let that create a demand which has a cascading impact on the economy, and then the private sector will follow. But then obviously then with that it becomes difficult to maintain the fiscal discipline. In the last budget, Finance Minister promised that from 4.1 he'll bring it down to 3.6% in this budget. They're a little contradictory, but I think if the government is courageous and so they can wait, then I think they will go for growth. Even if fiscal deficit is, say, from 3.6 it goes up to 4% or thereabout, it still is fine, but I think they will put a lot of emphasis on growth. One more bounty that they are having this time is the crude oil prices. It's almost about $60-65 billion, and most of it is not passed on to the consumer. So if you look at the prices at retail level, they are more or less similar despite global prices less than halving. So I think this is the money that government can put in plan expenditure, in creating capacity, and not in the populist measure like subsidies or the giveaways to farmers or the lower section of society. I think if they do that, then that will be the trigger for, and I think that should be viewed positively by the market.
Nirmal, are you saying that you would like to see pump priming, but money for that coming from the saving they make in subsidy and not at the cost of the fisc?
Yes, largely from trying to curtail subsidy. I think this government has done well in last 8 months. So if you look at, they are trying to cut down by making sure the leakages are reduced, so if you don't do incremental subsidy, the base of GDP keeps growing, and then also is fine. So I think significant parts would come from there and not from fiscal deficit, because if you try and increase the fiscal deficit, that increases borrowing, that won't let the interest rate come down at the pace as they ought to. Obviously, that has negative impact somewhere else. So I would be happy if they try and keep fiscal discipline, give and take a few basis points from the target fiscal deficit, but pump prime the economy. That is the need of the hour. And in fact, the situation or the backdrop is very fortunate. People talk about dream budget. I would say these are dream circumstances for any finance minister to present a budget. You have commodity prices coming down. I mean, India is a net importer and consumer of commodities. Crude oil prices are down. Also, global liquidity is very benign. And in terms of investment destination, India is signing out because Brazil, Russia, China, all aren't doing too well. In fact, they are either impacted by commodities, and in case of China, there are lots of internal problems. So things are going in favor and on the way India would want them to be. It's just question of how courageous and how innovative you are, how imaginative you are, and what is the time frame that you take for this budget. So this budget will be quite a historic budget to my mind. Circumstances are all very conducive for a strong budget, and let's see what Finance Minister does.
So that's on the spending side, but some people are worried that if you concentrate too much on pump priming, we will ignore, or the government could ignore, real reform. So what real reform would you like to see in the budget, which will set a long-term base for India's growth?
I think real reforms are happening outside the budget also, but the key reform that everybody has been waiting for is GST. Finance Minister has done a lot of hard work towards that, and I think 2016 is the target. So that is one. Other than that, FDI in insurance, railways, defense, all these ordinances should become law, because you look at insurance sector, nobody has brought in capital, nobody has brought in FDI, despite the fact that ordinance is also as good as law, because people are scared. Also, Vodafone kind of issues, they should not arise. So government should give good assurance, which is in the form of budget pronouncements or in the form of law, that this is an environment which is conducive for foreign investors to do business, conducive for domestic businessmen to do business, is easy. We have talked a lot about the ease of doing business. I think there are a few steps in that direction. So these are all the qualitative things that people would expect from the budget.
So the budget is one event, but it will be the entire parliament session in fact, Nirmal, that will determine the course of these markets. Because, for instance, the conversion of many of these ordinances into law, or even the actualization of the GST bill, the constitutional amendment bill, which was just tabled at the end of the last session, all of that will come into play in this budget session in many ways. So it will be actually, well into March for these markets to make up their minds on which way to head, or at least the momentum upwards will be determined only, once we get through most of March?
I think the momentum will be determined by the budget, because that is the most significant part of what this government wants to do. If I mistake not, most of the ordinances, government will have time till May to convert them into law. So even if they are not able to do it in this session, then probably they will take it up in the next one. I'm not very sure on that, but that's my understanding. I think budget is key, and apart from the major reforms that we are talking about, also what finance minister can do is to get the popular sentiment in favor of the government. Is they can increase the personal tax limits, they can do something on individual taxation, they can simplify the tax laws, they can give more exemption for savings and like ATC, ATD and all those provisions that are there. So that can also generate a lot of positive sentiment. I don't know whether they will try and do something on dividend distribution tax, which is double taxation of a sort. They will do something on corporate tax or the surcharge, which has been there for a long time, which when introduced was supposed to be temporary. What they do to simplify a number of complex tax provisions that are there. So all these things are also important. But I think ordinances are there. The budget will be the key sentiment key determinant of the sentiment going forward. And of course, ordinance then will become the next trigger. But I think for the time being, all eyes are on the budget.
Well, typically an ordinance has to be voted into a legislation by Parliament within 30 days of the next Parliament sitting. So anyways, we'll see how that goes. But does your investment strategy then, pre-budget and post-budget, of course, depending on what the budget announced, change very much from the beginning of the year? So would you advise that at this point in time, investors move more towards, infrastructure and economy revival related stocks and hold on to those, because that's what you hope the budget will deliver?
I would say that, I would rather wait for the budget's actual, what budget has in the store. We don't know that. So there are a lot of talks whether they will give 5% interest subvention for renewable sector, or they will give certain investment allowance kind of impetus or incentives. I would not get into sector-specific bets based on expectations, but I would rather remain overweight in equities as a whole. And I would try and diversify my portfolio into certain sectors like, say, banking. Within banking, I would prefer private banks. They benefit they're proxy for the economy. So they will benefit from the macro trend. They'll also benefit from a fall in interest rate, which everybody is expecting. And given that globally, most of the economies will get into deflationary kind of environment, it's difficult to imagine that India will maintain interest rate as high as what we have currently for too long. So I think banks will benefit a lot. Then other than that, cement, auto, these are the early sectors to benefit from the turnaround, where as we are talking about earnings impact, I think infrastructure will take longer time when for the earnings to come in their bottom line. But the early impact will be on these sectors. I'll also look at FMCG sector. They're benefiting from commodity price fall. I'll also look at pharma and IT sector as a broad portfolio, because I think if the India story does well, then you have a broader portfolio.
Nirmal, what does that leave out? That only leaves out PSU banks then.
No, it leaves realty stocks, it leaves infrastructure, it leaves a lot of capital goods, it leaves utilities. For power sector is up today, but I'll be a little cautious there. So I think, but of course it covers most of the sectors.
So infrastructure, capital goods, power, utilities, these would all, sort of come back onto your radar depending on what the budget finally lays out, right?
Certainly. I think they will come back on radar based on the budget and what kind of investment, what kind of incentives and what kind of the outlook these sectors have after the budget. So I'll wait. Most of these sectors will have very good companies to invest. But I think rather than rushing into it, I'll wait for the budget.
Okay, one final question on my end, Nirmal. You know, one of the non-budget themes that has been playing out since the beginning of this year has been the defense sector. The big moves that we've seen to open up investment flows into the defense sector and the interest that we're seeing come in from a variety of players in India Inc. You know, how would you put money or bet money or invest money in the defense sector right now if you had to pick a few top picks?
So defense sector is definitely looking very promising, and most of the valuations have gone up very significantly in expectations of what's going to happen. But I would say that amongst the stocks, I would say Bharat Electronic will be, it's a PSU, so it's a government company, and it has a large coverage of various segments of defense sector. So, and it's a well-run company. I mean, this company has good tech. So this is one company that I would say one should look at. Other than that, there are quite a few small cap companies. I don't have detailed research on them, but of course I hear from various sources, a company like Astra Microwave and things like that, or Walchand Industries. So there are so many of them. There'll be many indirect beneficiaries of defense sector also, like Tata Motors or this Ashok Leyland, because there'll be orders for buses and trucks and jeeps and tempos. So I would say that there are a few companies, but one company that stands out is BEL.
All right, fair enough. We'll see you, Nirmal, on Budget Day. Thank you very much for the heads up on what you expect. Let's see what comes out finally. Nirmal Jain of IIFL there, talking you through his market strategy in the days to come, especially focused around the budget.